This discussion is for informational purposes only. Views expressed by participants are their own and do not represent Alea Research or any affiliated entities. No statements should be interpreted as financial, legal, or investment advice. Participants and viewers are responsible for their own analysis and decisions. Welcome to a new Market Cap episode. Market Cap features firms and funds to explore the thinking that guides them, the patterns they observe, and other forces moving the markets. I'm your host, Stefano, Director of Institutional Services at Alea Research, and with me I have Shimon Newman, CEO and co-founder at Moto. Welcome to the show. Moto is building a new credit card product emphasizing simplicity, premium experience, and capital efficiency, with an early focus on a small curated user base. They're currently in their initial rollout phase and exploring how modern financial infrastructure can support a different approach to spending and cash management. Shimon, welcome. It's nice to finally have you with us.
Thank you so much for having me. It's really a pleasure to be here.
Absolutely, likewise. Let's we had a very interesting conversation a couple weeks ago. You definitely have a lot of insights on card companies right now as they're developing in our space. But yeah, let's frame it a little bit first. Can you tell us what you were doing before, how that shaped your thinking, and how that led to your current role in this project with Moto?
Yeah, sure. So thanks again for having me on. Really excited to explore a little bit about how Moto operates and why we're building Moto and how we're approaching the problem of scalable on-chain consumer credit. In terms of me, so I've been working full-time in crypto since 2017. I had built a very strong name for myself in token economics and governance. I have a background primarily in game theory and incentive design. Last year in 2024, Squads, which is for viewers who might be unfamiliar, the largest multi-sig on Solana, securing, I think, something like $15 billion in assets. They had raised their Series A, and initially they were really excited about on-chain governance and token design. So I exited my company to Squads and was essentially acqui-hired. And once I was there, though, I was really, really excited about, not so much the token governance stuff, but what they were doing around fintech. And I transitioned from director of governance to director of research. And I played a very small role in the early strategy and focus around fintech. As a part of this, my current co-founder, my co-founder and CTO Ramses, he joined Squads where he developed the first iteration of Grid, which is Squads' fintech infra offering. So I was getting paid to think, which is a pretty sweet gig.
Mm.
But I'm a founder at heart, and I was kind of itching. It wasn't enough for me just to do research and kind of contribute to strategy. And as a direct byproduct of my research, I saw a lot of market gaps for on-chain consumer credit, and also had this kind of profound realization that high net worth users are being underserved, not only in, crypto cards, but even in Web 2. I live in Europe. I'm an Amex user. And while Amex comes with a lot of benefits, a lot of these benefits are geared towards, I would say people 50 plus, right? It's not, I do not believe that there's any credit card being built right now that's really positioning itself for the next generation of wealth. And yeah, this combined with observing flaws in on-chain card business models, maybe with a notable exception of EtherFi, who I was also very inspired by, just made me want to go all in on Moto and build something that was truly a convergence of a lot of my passions, which is, DeFi, startups, consumer experiences, and also try to build a real brand was really exciting. I've had a lot of experiences in DeFi, but to kind of build something in meat space and to build something that people really want to be a part of was a challenge that I was really excited by. So my co-founder and I left Squads in April of last year with the blessing of Squads management to go all in on Moto. We raised our $1.8 million pre-seed round from Cyberfund and Eterna Capital in November of last year, plus some pretty cracked angels as well. And yeah, now we are beginning to roll out to our initial cohort of just 20 users, and we're only letting in 100 users over the next 2 months. And our goal by the end of the year is to reach 1,000 high net worth users and build a truly exceptional and meaningful credit card experience for the members of Moto.
It's a very how should I say it? Very slow is not the word, but very careful approach, very curated approach. Um,
Absolutely.
that's that's nice. You're you set the stage really well. It's very clear what your background is and how it led to this. You one of the things I really found interesting about our conversation earlier was your insights around everything that's happening in the card space. And my first question would be kind of around that. So I would like to ask, how do card companies, maybe in general, but specifically in digital assets and crypto, typically make money or generate returns? And maybe tacking on to that, how is Moto thinking about doing it?
Yeah, that's a great question. So one of the biggest mistakes that crypto card companies make is optimizing for spend. So, the way that let's specifically dial in on crypto cards, and let's also, maybe categorize them between on-chain and off-chain card models because they both have different business models. Now, with on-chain cards, they typically a lot of projects are optimizing for things like spending fees, which means they typically need to add fees on top of whatever is being spent. And the reason this is because their underlying issuer as well as card network also require a portion of the interchange. So, a lot of card companies will add, let's say, friction to the user experience at a real net negative to the user to make money. Yeah, or they will charge a lot of money for physical card orders, which is great, but that's not reoccurring revenue, right? Like that's one-time revenue, and in my opinion, isn't super sustainable. So that's kind of on the on-chain side. There are a few exceptions, like most notably, in my opinion, EtherFi, because EtherFi makes money on its card program, but also makes money on the underlying yield infra because it owns the yield infra, right? That powers its card network, which is something that not a lot of on-chain cards do. With that being said, on the off-chain side, which is like Gemini, Coinbase, Bybit, right? These card programs very often lose money on the card itself and upsell their clients on other services or require certain thresholds to get the full benefits of their card. So, I think Bybit, there's a few ways to qualify for $600 in cash back per month from their debit card, which is also not a credit card. And I think it's like for instance, I think one of them is like average monthly volume of 30 mil or plus, right? Which of course they're generating fees on. Same thing with Coinbase and Gemini. They have lower tiers or thresholds for accessing higher cashback tiers. But the idea is that they get you onto their exchanges, and that's where they make their money from you one way or another. So one of the big breakthroughs for Moto was realizing that the main way that, let's say, traditional neobanks or fintechs tend to scale is actually as a matter of assets under management. And by building a more capital efficient model with on-chain buy now, pay later, we could marry our incentives with the incentives of the modern luxury credit card consumer, and actually use higher AUM fees, right? To then reward users not only with the best cashback and combined best cashback and interest in the market at up to 5% interest on all deposits and 5% cashback across all spending, across all tiers, but also use these DeFi rewards to reward our users with meaningful experiences, both virtual and in real life, and really stand out from the competition. So, in terms of risk as well and how we manage risk, another approach that maybe differs us from our competitors is that we only work with yield providers that can either contractually or crypto economically guarantee 100% principal coverage in the case of any black swan or negative event. I've been in crypto for a long time. I lost money on both FTX and Celsius, and I believe that we've come a really long way as an industry. And there are some examples of projects doing this, such as Aave, which I think insures each one of their mobile app users up to 1 million. Um, but we just think that at this stage, principal protection is kind of a prerequisite to building a retail product that is meant to go beyond just crypto native people. And it's very important for how we approach risk as well.
Absolutely. I think that's very much in line with the times and the direction the sector's moving in. So we already spoke about some of these. These came up naturally, but maybe what would you emphasize that something you deliberately do not do, even if other card companies do pursue it?
Yeah, that's another great question. So we purposefully do not try to scale to as many users as possible. So
Mm.
in my opinion, a lot of on-chain card programs, or even DeFi projects, right? They kind of do this thing where you're a startup, you're trying to figure out product market fit, right? And therefore you want to kind of provide a bevy of options for consumers to buy, right? So you might just say, okay, we have 10 different card tiers, and okay, if you pay us this much money for a card, then we'll give you this much cash back. Or if you just want to be on a free card, then okay, cool, but we won't give you any cash back, right? And I think that there's just not a lot of, let's say, clear focus, and maybe the clear focus for the revenue generating users emerges after PMF is found. But then you also have all these other users that you need to satisfy, or your customer satisfaction will go down, which of course can kill your business, especially in the card business where it's extremely competitive. And you basically need to spoil your users to even have a chance of survival, right? So for Moto, we are all in on quality over quantity, and we are building a true luxury credit card brand from day one. And that's why we are taking such a curated approach. And I think, just to speak from my own experience as a serial founder and entrepreneur, um, a big mistake that I see a lot of on-chain cards are just projects making, like I said, is just having to make everyone happy, right? And in my personal experience, I've really learned that the person who, like, let's say, has $200 stuck on your DeFi platform or exchange is going to be so much more vocal and upset than like the guy who has 100K stuck, right? Because the thing as well is that people who move money or use money with some degree of size, or seeking some type of return, they tend to be a lot more aware of the risks that they're taking. And so, I just think in general, a open garden approach to building a DeFi startup can have a lot of drawbacks as well. It of course depends on the vertical and what you're trying to achieve. But for Moto, we are deliberately hyper focused on consumer experience, which means that it's a privilege to be one of our first card members, and we also make sure that our first members know that in how we reward them.
Absolutely. This ties in pretty directly to the next question. At least I think it does. I suspect it does, but I'm curious about your answer to it. You mentioned a lot of big players, EtherFi, Coinbase, Bybit. You guys are a startup. That's got to come with certain constraints and frictions. Those got to shape how you operate. Can you shine a light on that and your choices around there?
Absolutely. So since we at Moto make money on assets under management and also want to use a large portion of the fees that we generate from AUM to provide a genuine bona fide luxury experience for our first members, that all takes pretty significant revenue. So the biggest constraint and challenge for us is that we need to find safe but high yield on-chain opportunities to back the money-making engine behind the scenes of Moto. Furthermore, we are on-chain and non-custodial. So with those two constraints in mind, we need to be extremely selective with who we partner with. And, currently we're partnered with Reflect Money, which is a pretty cracked team on Solana, um, I believe incubated by A16Z. And what we really like about them is that they insure 100% of the principal while still getting very competitive on-chain rates, currently backed by on-chain lending, but also in the future, more interesting yield strategies as well. So that's a little bit of a plug of them, but for viewers of this show that might be interested in how we get our returns safely and how we guarantee the principal, we only select once again for partners that can either crypto economically or contractually agree 100% of the user's principal.
That's insightful. I personally, my thoughts were going in a different direction. I thought you were gonna say that. Well, what we spoke about earlier was that because you're a small team, like you chose specifically to go for a high end segment,
That's
and I
true.
think that that makes sense for like a startup to like one focus, but also where you focus is very interesting, right? And I think it's a smart decision. Um, But of course, there are many constraints at play, and this one was also a very insightful one. Um, let's move it forward. You are or were head of research. I can also tell that by the way you present. It's very organized. You must have a ton of insight on market and data. What are you seeing, and what do you think is still being underappreciated by others looking into this sector or segment?
Yeah. So um, I think that one of the things that is underappreciated is that right now, true retail interest in crypto is at an all-time low, even with, kind of the more favorable start to the year we've seen. And I think that's telling of a lot of things, which I think, probably we'll get into with some of the other questions that you've prepared for me today. But I actually think that crypto usage, as how we in the industry think of it, um, is pretty abysmal. And I also think that there is a strong conflation between crypto adoption and stablecoin adoption, right? So, because if you look at the global census of I think 2024, 7% of the world has exposure to crypto in some way, right? And that seems like really meaningful adoption, but the reality is that this is actually more of everyone's uh gone into this more than enough, right? But stablecoins have clearly found PMF, but where they have found PMF, it's really a reflection of mostly political and economic instability, right? And I think right now, right, crypto has not yet entered the actual mainstream, and let's say not the unbanked or those who are either trying to evade sanctions or hyperinflation, right? Because there's many different uh, reasons why someone would hold a stable coin, right? But I just don't believe that in like terms of actual zeitgeist, crypto is very well positioned right now, and that presents a lot of opportunities, but also a lot of realities that I think builders in our industry and even VCs need to be aware of.
That makes sense. These insights you've gained in your experience the last couple years, you alluded to that already, your background. What would you say you have learned in the last 1 or 2 years at those different projects and those different roles that now materially guides your decisions in guiding and leading Moto?
So I had previously alluded, or we had previously alluded to how we're taking a slow and curated approach to growth. And, maybe it's a controversial decision, but it's definitely directly shaped by my last 2 years of professional experience. So I would say that if I had to like boil my last 2 years and down into like a lesson, it's that as a startup, you either have to dominate a tiny but lucrative market or capture the entire market and make money as a consequence of sheer scale. So, the company that I exited to Squads was called Fibonacci, which I had co-founded with someone named Semyar Tarani. And we had dominated the very niche market of on-chain risk visualization after 2021 into 2022, right? And when I say dominated, it's because we were the only ones that could do it. And that meant that we definitely got a lot of users, but we were also building in a bear market. So it wasn't necessarily lucrative, right? Like it wasn't, we had dominated a niche market, but we were making enough money to keep the lights on, right? But it's like we weren't killing it, right? And so I learned from that experience, like, if you're going to go after a niche market, you better go after one where if you do dominate it, you make a ton of money. Then on the other side, I was lucky enough to be acquired and work with Squads for a year, which is a very different story, right? Squads has dominated the entire market of multi-sig protection on Solana, right? And even with their new offerings on the fintech side, they have a ton of momentum as well, and they're doing incredibly well, and very proud of them, right? But that's also different, right? Because I was an angel investor in Squads. I've known the team since I think 2021 or something, right? And their success wasn't built overnight, right? It took a lot of time to get there. And I think that I just figured that if I'm going to put the founder hat on again, the biggest lessons that I took away personally was find a small niche but lucrative market and go all in, and see what scales after that, right? Like dominate a market that'll make you money, and then scale will be a consequence of that instead of building for scale from day one.
Yeah, I can see that. It also sounds intuitively like the second model to dominate an entire market as a startup is just so much harder.
100%. I think that when you, for instance, when you look at the neobank meta, right, which, Moto is kind of a part of, although, we would argue that we're not really trying to replace a bank. We're trying to replace your credit card experience. But of course, a lot of our functionality is similar. But
Mm.
with the neobank meta, everyone is currently trying to capture, in my opinion, one of two markets. So on the one side, there's institutions, which is, the real world use cases of stablecoins for things like cross-border remittance and financing. reducing time to settlement, etc. And then the other is the unbanked, right? And both of these segments, I would say, are hyper competitive. There's so many players. They're incredibly crowded. And it's also why at Moto we have chosen this niche market where we believe we can make money, which is high net worth spenders in crypto and beyond. And it's lucrative enough if it pays off, while allowing us as a pre-seed startup to ensure that we can provide a better customer experience than even our heavyweight competitors like EtherFi, Coinbase, which has Amex, or Gemini, anyone, right? Like we truly feel that, okay, maybe today we can't serve uh, 10,000 credit card users better than Coinbase could, but we sure as hell can do that for 100, So that's kind
Yeah,
of our mentality for where we are at as a pre-seed startup, and why we're so confident with this approach.
that's clear. Like choose your niche, dominate it, and then build from there. I like that. We talked about the last 2 years, say, and your experience there. Looking more recently, what has changed recently, like at the company or in the markets, that has forced you at Moto to make some adjustments, make decisions, make choices, really change something that you were like a direction you were heading in, and then move away from that.
Yeah, I think there's a lot of ways to answer that, right? I think that initially we were really excited about white labeling Moto solutions because we haven't gotten too much into this, right? But one of the core differentiators between Moto and other on-chain cards is that we have true on-chain buy now, pay later, right? Which leads to more capital efficiency for the user because they're earning interest on their entire deposit until the end of the month. And also means that the user can kind of offset their spending, right? And so, cat's out of the bag since December when we made our public announcement. And now other projects, I'm sure, are looking at what we're doing, and they're thinking about how they can do it. And so initially we kind of had this idea like, okay, well, if we beat everyone to it, let's sell some shovels, right? But actually, after a very long discussion with Constantine, the founder of Cyberfund, he made, he's a great guy, he's a very interesting guy, smart guy, but he was kind of making this point where it's like, if you guys have the secret sauce right now, why would you share it? Why would you give it away, right? And so I would say that there's not a huge technological moat to what we've built with this on-chain buy now, pay later model where we borrow from a credit facility and then we use smart contracts to guarantee repayment, right? Like anyone can kind of build it. We do have, kind of a first mover advantage there. And if we were to go into white labeling, we would divert our company's focus because we'd essentially be focused on the one hand building our own credit card brand, and on the other hand needing to provide the dedicated inference support to help others succeed. So I think that's, we decided just to go pretty much all in on our own brand, right? And if others want to copy us, we invite them to. If they want to learn from us, they can, right? And I think they should. But we're not necessarily in the business of helping others accelerate to where we are today.
Interesting. And it goes with the theme of focusing, niching down, limiting choices, knowing where you want to spend your resources, right? Even if those resources are cognitive, like your time, your energy, all those things. And I think it's also it's nice to hear how you got to that decision, or at least help you make that decision by talking with others and consulting with your wider network, right? I think that's very insightful. Are there other things that you're going back a little bit to your role as a researcher? Are there things you're actively looking at in the market or in the industry that, if that would change, would be like a clear signal for you to start doing some things differently?
For sure. There's a couple, right? So, one I would say is agentic finance, which has made so many breakthroughs in 2025, and I think we're just really at the beginning of. So, that's definitely something that Moto is researching and involved in, and we'll have more public information on that soon. But the advancements there are staggering. I don't want to hint too much on what we're up to at Moto, but we're working with Crossmint on some exciting things, and some of the stuff that Crossmint is doing is like straight up sci-fi, right? Like really, really cool company, right? So that's a new trend that I think really everyone in finance needs to be aware of. And I think that agentic finance is going to be one of the biggest accelerants of blockchain technology that the world has ever seen. And that's kind of like even a cypherpunk thesis, right? Like I think even Vitalik probably wrote in like 2017, eventually, agents are going to be interacting with Bitcoin, right? I mean, I think it'll probably be stable coins instead of a network token, but that's a different discussion. But yeah, that's definitely something to take an eye, or, to pay attention to. And
Hmm.
the other thing that I would say is just like, how far does the US go in terms of actually regulating and embracing these technologies, right? Because, I think one of the greatest ironies of self custody and kind of evading, regulatory capture or authority is that you also most commonly give up a regulatory support when something goes wrong, right? So, I think last year Bybit had the biggest hack in crypto of all time, right? But it's an offshore exchange, right? These are bad actors, right? And it's one of those things where everyone's like, fuck the system until you get fucked, right? And so it's like, I'm very curious if you could, like, let's somehow get FDIC insurance, but it's on chain, right? And maybe you have to be KYC'd, and maybe you have to guarantee that taxes are collected, right? Or whatever it might look like, right? But if there's programs that emerge like that, like, um, what are we really building for and solving for here, right? Are we still trying to build an alternative to the existing financial system, or is the existing financial system adopting our technologies, and we as an industry are actually going to be left behind because we're not involving ourselves in that transformation, or participating in making like when I say public infrastructure, I mean like governments, right? Or banks, or just our existing financial ecosystem run on these rails, right? So I think that, like, very curious to see what happens. It's obviously a very favorable presidency in the US for people in our industry. Maybe, I won't get into what I think for the world, right? That's a different conversation that isn't probably what your viewers want to hear anyways, right? So, but for our industry, he's a godsend, Trump, right? And I think that if the US, I mean, like, I know I'm speaking a bit about this, but it's like, so in my opinion, so much of the last 10 years of our industry's history is
Hmm.
shaped by trying to escape regulation from the US, or confound it, or avoid it, right? And
Hmm.
I still think that a lot of us as builders, many of us have been sued by, like, the government, right? Or a lot of people have to pay crazy fines or whatever, right? And of course, under the previous administration, there was a serious there's Operation Chokehold, right, which was like a true government mandated debanking effort, right? And so I think we all kind of still have this rightful fear of what happens when the government says, no more decentralized future, right? But I don't think enough of us are embracing the possibility that the opposite happens, right? That we're invited to have a seat at the table and actually improve existing systems and benefit from, especially things like essentially government bailouts, right? I think that's like the biggest issue crypto has, is that when something goes wrong, there's no one truly to bear the responsibility, right?
Interesting. Question. What do you think is potentially the bigger risk that we as an industry don't make the most of this opportunity in front of us and join it in time and have maybe um the five like Trat 5 basically go off with the spoils, or could it be also the dark side of maybe going along with this movement and getting co-opted, or basically the same thing happening because you basically trust the wolf in sheep's clothing, if you will.
Um, I think that I think that no matter what, if let's say the US government actually was at true war with our industry, we are not in a position to fight it,
Hmm.
right? Like, it's a huge difference between, people talk about Bitcoin as a, superior alternative to fiat, but the biggest thing that they leave out is that fiat systems typically have a monopoly on violence, right? And so, for me, there's kind of like, with the current administration and how banks and regulators are approaching blockchain technology and embracing it, like it's inevitable that we're going to have to trust the wolf in sheep's clothing, or if not
Hmm.
trust them, that's why we need to even be more active participants right now, because otherwise they are building these systems without any ethos, let's say, that led, or like none of Satoshi's ethos, I guess, would even be uh, embedded in a future, like, let's say, regulated on-chain world, right? And I would also say there's a lot of risk in going the other way and trying to escape the on-chain world. And, that's where you see the success of like Russian stable coins, right? Which are literally designed to evade sanctions, right? Or that's why banks in Russia, or oil companies in Russia, rather, they price their oil in USDT, right? Not in the local currency or in the US dollar, right? And it's why North Korea can fund its nuclear programs, right? So there's a lot of darkness, I think, as well, of purposely trying to escape regulation, right? And at a certain point, I think there was a justification under previous administrations, which is like, we just want to innovate, and like, I've had, offshore companies set up for previous DeFi startups, right? Like, and it's not because I want to go offshore. It's that if I want to even have a chance to build this cool new thing, right? I have to, so that, I'm not the one who gets screwed. And I also think that a lot of founders previously were kind of sacrificial lambs, right? Where there was this incredible amount of risk to build something in this space, whether it's a token or a protocol, right? And I think the reality is in 2026, a lot of the big scary demons that crypto founders face are mostly gone, and I think they're going to continue to go away. So, in my opinion, you have to not only embrace compliance and regulatory winds shifting, but also contribute to it actively.
Yeah, I like that. What resonated with me specifically is also you said if you don't seize this opportunity, if you don't go along with it, you lose control over what it is anyway. So, and that makes a lot of sense. Um, to to start wrapping this up, Moto, back to Moto. What's next? We talked about how you came like to where you are right now, what's going on, what you're keeping your eyes out for. But what's on the horizon? Say next 6 to 12 months. Maybe that's too far. Maybe 3 months.
Yeah, well,
Whatever,
next,
whatever.
sure, sure. I
Yeah.
mean, so like our next 3 months is we're gonna, you know, let's say 3 months scale to, let's say, between 100 to 500 users, right? Really optimizing for users that want a luxury credit card experience, and I'm happy to say that that's going incredibly well, and we've already identified an initial cohort of over 300 potential applicants that really fit our criteria, right? And we expect this to grow. This will be, a closed invite only beta where we're getting a lot of feedback, learning rapidly how we can improve our offerings to just be unbeatable, right? From there, we will open up referrals where very similar to maybe how Raya or Soho House works, right? That's really how the audience should think about Moto. We like, to be quite frank, we don't want just anybody, right? We really are trying to build something special here, and as a part of that, that means making sure that we're creating meaningful experiences for our first users, which means a decent amount of in real life events and opportunities for Moto members in the coming months. After the next 3 months, we will very likely open up the floodgates to, first invites only through referrals, and eventually start going through the quickly growing wait list and start letting in new users through lottery. We do also let in one user from the wait list lottery per week. So there's always a reason to sign up on the wait list, right? And the sooner you sign up, the more likely you are to be prioritized, and you can sign up at moto-card.com. That's MOTO-CARD.com.
Excellent. Smart about the lottery. I like that. Um, okay, it's clear where to find you. Where to find you personally, because if I may say so, I thought you shared some pretty insightful things in threads just on the state of the crypto card industry or sector right now, for example. So, where can listeners follow your work?
Yeah, so definitely I'm most active on X at Shimon_Newman. Um, Hopefully when you guys post this, you'll tag me. It'll be pretty
Of
obvious,
course.
or I'm not sure how that works. But yeah, so that's definitely the best way to stay in touch with me, and also to follow Moto's progress. And yeah, I really appreciate the work that you guys do. You guys are also pushing the frontiers of on-chain research, and also even these types of conversations, which I think surely give your listeners really interesting insights into how operators are actually operating in this space. So, as one researcher to another, appreciate the kind words that you say about some of the work that I put out. And also, the respect is mutual. So thank you again for your questions and time today.
Really appreciate that. We do our best. Um, Awesome to have you on. It was very insightful, very interesting conversation. I really liked it. We went pretty deep. So thank you for sharing that.
Yes, thank you as well. And thanks again for this opportunity.
Lovely. I also want to thank everyone for tuning in. It's always a pleasure to have you with us. If you enjoyed this, you can access more insights in the following ways. For in depth reports, many of them publicly accessible, you can join our research platform. For protocol and market summaries and highlights, you can subscribe to our newsletter. And for daily news updates, you can join our Telegram channel. All the links are in the bio. And of course, tune in next time. We release a new episode every week. So follow us on X and YouTube. This was Market Cap, where funds and firms provide their insight on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. See you on the next Market Cap.